David had been trading for 3 years of charts, 3 years of courses, 3 years of losses. He still told people he was building something, still believed the breakthrough was coming. It never came. And if he did not recognize these signs and overcome them, it never would. Because David was not building. He was repeating the same mistakes, the same patterns, the same beginner behaviors, hidden inside 3 years of experience. Time will not automatically make you professional. Transformation will. And David had not transformed. He was still a beginner. He just did not know it yet. He would recognize these signs and make transformation inevitable. This is true for most traders. Years pass, accounts blow, strategies change, but the core problems remain, because experience without awareness only brings repeated failure. We try to change the external world while skipping the internal factors, and we cannot change the external world without changing internally. And the scariest part? You cannot fix what you cannot see. So today, I will show you 5 signs, 5 behaviors that scream beginner, even if you have been trading for years, even if you think you are past this, because David thought so too, until he saw himself clearly, and everything changed. My situation was no different from David until I saw the signs and changed. First sign: you are still trading for money sometimes or most of the time instead of being execution-focused. David opened every position with one thought: how much will I make? 300 on this trade, 500 on that one. If I take 4 today, that is 2,000. Week after week, calculating profits that did not exist, focusing on numbers instead of thinking about whether he could execute properly. Living in fantasy. Trading imagination, not reality. Every pip movement was dollar movement in his head. 20 pips up, $80. 15 down, 60 gone. He could not watch price. Only P&L. He became obsessed with it. And when you watch P&L, you cannot execute properly, because every decision becomes about protecting money, not following the plan. If you let money affect you, good execution becomes a dream. If you focus on execution, money comes automatically, even if you are not always money-focused. If you occasionally trade money-focused, this also keeps you at beginner level. You will have financial needs, and if this pushes you to be money-focused, it will force you to stay at beginner level. You must break the chains of money, no matter how difficult your conditions, no matter how urgent your need for money. Because this way, everything just gets more delayed and harder. The moment price moved 5 pips against David, panic would hit. That is $50. What if it keeps going? What if I lose 200? The plan said hold to stop at 40 pips. But David could not wait. He would close at 10 pip loss, then watch price reverse and hit his original target. Without him, every time. Or worse, price would move toward target, up $60, 70, 80. Classic story we all know. But even though we know it, everyone can experience this again, even if rarely. Pay attention to this sign. You must intervene the moment you witness money getting ahead of execution. Stop repeating this beginner behavior. You can prevent this by stopping managing the trade until it closes. Enter, set stop, and take profit, and just wait. How much loss or profit you see instantly becomes irrelevant. Professional traders do not calculate profit mid-trade. They do not watch P&L. They watch structure. Is the setup still valid? Is the trend intact? Is the level holding? These questions matter. How much am I up does not matter. Because you cannot control outcome, you can only execute process. And when your focus is on money, your execution falls apart. Even the most professional will inevitably make mistakes if their focus shifts to money. David did not realize this. He thought tracking profit and loss was smart, being aware, being responsible. It was not. It was sabotage. Every trade he took was contaminated by outcome obsession, and outcome obsession kills execution. Every time. Recognizing this is the first step. Remember, you cannot change what you cannot see. Know your enemy. And most traders never see it. They think focus on profit is natural, logical. But it is the mark of someone who has not understood the game yet. The game is execution, not profit. Profit is the byproduct. Execute well and profit comes. Focus on profit and execution dies. If you want to move beyond beginner stage, abandon money obsession and focus on your execution. Second sign: you still hop strategies when things get hard. There are two basic reasons for this very briefly. First, you do not trust your strategy enough, meaning you have not tested it enough. And because you are not sure about the results it will bring, you cannot stay loyal, or you cannot execute your strategy enough and sometimes face consecutive stops and move forward because you are impatient. You want to get to results immediately. You are not realistic. Even the best strategy can stop out many times in a row. This just depends on mathematics wanting to work against you. If you cannot accept this, you are still an amateur. You will not solve anything by hopping strategies. Of course, if you are trading a truly unprofitable strategy, that is different. David had tried 11 strategies in 3 years. Price action lasted 4 months, then ICT, then SMC, then order flow, then price action again but different, then hybrid model, then pure support and resistance. 11 strategies. 0 mastered, because David never gave anything time. 50 trades, maybe 100. That was his tolerance. He was trying and trying. He could not stay loyal because he had not even tested which strategy was how profitable. Naturally, he had no strong reason to stay loyal. He was rolling dice and hoping to succeed. Some days he could be profitable, but could not sustain it. Because you cannot build a trading career by rolling dice. This is not possible. It took time for him to realize this. He needed to return to reality. I needed to as well. He continued to believe he needed to find a very good strategy. He was actually looking for a supernatural win rate and a strategy better than most strategies. But he would not find it. Executing an above-average strategy well was enough. But it would take time for him to realize. Instead, when he stopped out 3 times in a row, he chose to blame the strategy and continue with a new one. If you stop out 3 times, the strategy is broken. Move on. Find the better one, the one that works immediately, the one without drawdowns, the one that requires no patience. This pattern repeated. New strategy. Initial excitement. First few trades win. This is it. I found it. Then losses come. 3 in a row. 5 out of 7. Doubt creeps in. Maybe this is not it. Maybe something else is better. He would see another trader sharing wins with a different method. That looks good. Maybe I should try that. Switch, reset, start over. Never reaching the sample size where edge reveals itself. Because edge does not show in 50 trades. It shows in 500, 1,000. David never stayed long enough to find out. And here is the trap. Every strategy has losing periods. Every single one. Even the best edge in the world will have weeks where nothing works. Drawdowns are built into probability. You cannot avoid them. You can only survive them. But David thought he could avoid them by finding the perfect strategy, the one that only wins. It does not exist, and the search for it kept him in the beginner category. Year 3. Still looking, still switching, still starting over. Professionals commit. They choose one approach, test it properly, minimum 500, even 1,000 trades, across different market conditions, through winning streaks and losing streaks, through easy periods and hard periods. They do not switch at the first sign of difficulty. They do not abandon ship during drawdown. They stay with the process, refine it, master it. That is how you graduate from beginner, not by finding the perfect strategy, by becoming the person who can execute an imperfect strategy perfectly. You cannot succeed by doing what everyone does. And at a time when everyone is hopping from strategy to strategy, you must stay loyal to your own strategy. A tweet you see on Twitter titled, "My 83% win rate strategy," should not change your mind. Third sign. You panic during losing streaks. David could not handle consecutive losses. 3 trades, 3 stops. His mind would spiral. Something is wrong. The strategy is broken. The market changed. I am doing something wrong. Panic, fear, desperation. On the 4th trade, he would break rules, trying to fix it. He would take more risk to recover faster. He would force trades that were not there, trying to force a win, make back losses. It never worked. Breaking rules during drawdown only makes it worse. But David could not help it. Losing streaks terrified him, made him feel incompetent, out of control, like he was failing. Managing losing streaks is one of the most important skills you need to learn in your trading career. After stopping out 7 times in a row, Will you be able to take and manage the eighth trade properly? This question will determine your trading career. David did not understand that losing streaks are normal, because honestly, losing was not even on his mind. His only focus was winning, so he was caught unprepared every time. Built into trading. If your strategy wins 60% of trades, that means 40% lose, and that 40% does not distribute evenly. Sometimes it clusters. 5 losses in a row. 7 out of 10. This is not strategy failure. This is variance. Normal statistical distribution. But David interpreted it as personal failure, and every time he stopped out consecutively, he found a way to ruin everything. He abandoned his discipline. He gave in to his doubts and reset the entire process. "I am not good enough," he said. "Does not understand the market." He thought he needed to fix something immediately. So he would change position sizing, or add a filter, or switch time frames, anything to stop the bleeding. But the bleeding was normal, and his interference made everything worse. Expect losing streaks because they will come. And when they come, if you are ready for them, you can handle them. And traders who handle losing streaks survive and can continue being profitable. This is inevitable, and they know it. They accept it. They make plans to manage it. They are ready. Professional traders expect losing streaks. They prepare for them mentally, financially, systematically. When 3 losses hit, they do not panic. They check execution. Did I follow my rules? Yes? Then continue. No? Then fix discipline. They do not question the strategy after 3 trades. They do not abandon the plan during normal variance. They understand that edge plays out over hundreds of trades, not 10. And temporary drawdowns mean nothing in the long term. But beginners cannot do this. They need constant validation, constant wins. When losses cluster, they interpret it as a sign that something is broken, that they need to change something. This constant reactivity keeps them stuck, because they never let probability play out. They interfere at exactly the wrong time, during variance. And interference during variance destroys any edge that existed, ruins the entire process. Understanding this is crucial. If you panic during losing streaks, you are still thinking like a beginner. Time in the market has not fixed this. Only awareness can. 4th sign. You cannot sit still without a setup. David needed action. Every day, market open, charts up. He had to trade. Setup or no setup. If an hour passed with nothing, the itch started. By 2 hours, unbearable. He would force something. Find a mediocre setup. Convince himself it was good enough. Enter, usually stop out. Then repeat. Some days he took 8 trades. 2 were legitimate. 6 were boredom trades. Action addiction. And those 6 ruined everything every time. This is very common beginner behavior. Confusing activity with progress, classic trap. Thinking screen time equals productivity. It does not. Professional traders sometimes take 1 trade a week, or 0. If setups do not meet criteria, they close charts, walk away, do something else. No fear of missing out, because there is nothing to miss. No need to be involved naturally. They understand that trading is not about participation. It is about patience, waiting for the right moment. And most moments are wrong. If you feel fear of missing out, be aware that you are about to enter a trade you are going to lose. Look at your own triggers and which trades your emotions emerge in. If there is fear of missing out, your probability of taking a bad entry is high, and you will probably stop out. Observe this, and you will notice it too. But David could not accept this. Trading was his identity. If he was not trading, what was he? Just a guy watching charts? That felt like failure, like he was not doing his job. So he stayed active, kept taking trades, kept losing money. Because activity is not profitability, usually means the opposite. The more you trade, the more you expose yourself to variance, to bad timing, to suboptimal entries. The less you trade, the more selective you are, the better your average trade quality becomes. Professionals understand this. They have no problem doing nothing, because they know doing nothing when there is no setup is actually doing something. Protecting capital, waiting for edge. That is work. Hard work. Harder than taking random trades, because it requires discipline, self-control, patience. Things David did not have. After 3 years. Still a beginner in the most important skill, the ability to wait. For example, today was a very productive day for me because I took 0 trades. 3 bad setups were there, mediocre I could say, but I took none of them. And if I had taken them, I would have closed them at a loss, but I closed break even with 0 trades. So today was quite a productive day. In the beginning, it is very hard to think this way, and doing it sincerely seems impossible, like playing a role. But over time, you understand this is true, and it becomes normal. As you see what not taking trades protects you from, your brain will normalize this. See the potential loss you avoided by not trading today and write it down. Realize how important what you did is. Fifth sign, you blame everything except yourself. When trades failed, David had a list. The strategy was not clear. The market was choppy. His broker had slippage. The news spike ruined his setup. Instagram gurus gave bad advice. Everything was at fault. Except him, his decisions, his discipline, his execution. Those were fine. The problem was external. Always external. Traders who blame external factors are always doomed to stay at beginner stage. Do not blame yourself, but hold yourself responsible. Because you are responsible for everything, not the markets, not luck, not your strategy, not your broker. You. This is the ultimate beginner tell. External blame. Because as long as the problem is outside, you do not have to change. The strategy needs fixing. The market needs to behave better. The broker needs to improve. You are fine. Just unlucky. Just in a bad situation. But here is the truth. The market does not care about you. The broker is not sabotaging you. The strategy is not broken. You are. Your execution. Your discipline. Your psychology. That is where the problem lives. Always. David could not see this. 3 years, and he still thought external factors determined his results. He believed this because it comforted him. But this comfort was the very thing keeping him from his dreams. He would realize eventually, but for now, he continued believing the same lie. He would journal after losses. Today, the market was unpredictable. Today, the strategy did not work. Today, bad luck. Never today I broke my rules. Today I overtrade. Today I let fear control me. Never internal, always external. And this kept him stuck. Because you cannot fix external, you can only fix internal. And until you admit the problem is internal, you stay beginner. Forever. If you are among those who accept the problem is internal and take responsibility, congratulate yourself. You are in the minority. And this acceptance is the first step in changing everything. Professionals take responsibility, total responsibility. Every loss, every mistake, every blown account. Mine, my decision, my execution, my discipline. No excuses. They do not waste time blaming market conditions or strategy flaws. They look in the mirror. What did I do wrong? How can I execute better next time? This mindset shift is what separates beginner from professional. Not time, not knowledge, ownership. David finally saw it. Year 3. After another blown account, after another cycle of hope and failure, he saw the pattern. All 5 signs. Every single one. He was still a beginner. Despite 3 years, despite the courses, despite the screen time. He had not evolved, he had not transformed. He was repeating the same behaviors, expecting different results. Insanity. But seeing it was the breakthrough, because you cannot change what you cannot see. And once David saw himself clearly, he could finally change. He stopped trading for money, started trading for execution, stopped hopping strategies, committed to one, stopped panicking during losses, started expecting them, stopped forcing trades, started waiting, stopped blaming external, started taking responsibility. It was not easy. It was not fast, but it worked. 6 months later, David was different. Not just his results, him. The behaviors changed, the signs disappeared. He was no longer a beginner, after 3.5 years. He finally graduated, not because time passed, because he transformed. So look at yourself, honestly. Which signs do you show? Do you trade for money or execution? Do you hop strategies or commit? Do you panic during losses or expect them? Do you force trades or wait? Do you blame external or take responsibility? Answer honestly, because these signs are not judgments. They are diagnostics, showing you where work is needed, where growth must happen. Time will not fix them. Only awareness and intentional change will. David wasted 3 years repeating, "You do not have to." See the signs, own them, fix them, and graduate. The market is waiting, but only for those who have done the work, not on strategies, on themselves. Which signs are you ready to face?